Hi, this is Simon with Trade and Perform Coaching, going over the trade review for uh, the 19th of May, 2014. And so let's jump right into it and see if we can't make this brief, but very helpful. So this morning I talked about a couple of things coming into the day. The first one was NQ, right? And I mentioned that TF outperformed the market on, which is the Russell 2000, outperformed on Friday, and that can be a harbinger of a push up. Obviously, NQ and TF have been the weak sisters of these three. So if we gain strength in NQ and TF, it would bear to reason that we would follow that same strength with ES. Okay. Number two, what am I always concerned about in the open? Well, the first thing that I do every single morning is I go over what it would take to get what an open drive higher might look like and what the implications are for that. So this, my friends, is an open drive higher, 3 bars up, take a picture. The only thing that this did not have was a gap up accompanied by it. Had we had a gap up and we gapped, I believe, above the 1878.50 level, right, we could have really done some serious damage to the upside this morning. Additionally, look at the pieces that we were talking about. There was no counter rotation inside this move. Once we came and we hit gap fill, there was absolutely no rejection there. I want to show you something. One of the key elements that we need to make counter trading work most days is to get that counter rotation. Okay, so if we look at a 1-minute chart, okay, look at this open up here. Let's erase that real quick. Sorry about that. Okay, so if we look here, okay, we got a small push down at the open, right? Where was my target to get long off the open? 1866.50 is where I was looking to get along. I was totally willing to get long this morning. So where does that fall into my philosophy? How do I handle that from a psychological profile of myself, right? Well, you know what? I don't care that they didn't hit me. It's all right. I'm trying to, there's two kinds of traders. There's the kind of trader that goes in and says, I'm going to capture it no matter what. It's all about making the money. It's all I care about. And there's a trader who cares about, all I care about is my process. My process keeps me safe. My process makes me money. My process keeps me on the consistently winning side of the ledger, right? And it keeps my drawdown small. My process said that this location right down here, gave me the best odds of getting a long side trade. Okay, they didn't give it to me. I don't care. That's totally cool. Let them not give it to me. My next trade location that said gave me a good shot at a short was up in this area right here. Okay, so notice what that eliminates me from. I didn't have to make any kind of decision in any of this noise here. My hand was not forced. That right there by itself is essentially 1869.50 all the way up to 1875.50. 6 points where there's no chance the market can take money away from me. That's valuable. It means that I can draw my eyes to the location where I have the best chance of making money. Okay, so moving on with that concept, okay, if you look, this was, the backside of this was Globex high, the bottom side of this was essentially Friday's high, this was gap fill. I guess I needed to move this back just a hair for Friday's high. But the whole point being, right, was that this 1877.50, I just basically split the difference and took 1876.50, right? Then I had a couple of things that were helping me out to make sure that I don't get destroyed, right? And one of those things is, well, let's cancel that. The amount of time that it spends in a zone. Now, to my coaching clients, I talk consistently. 25 minutes max, right? After 25 minutes, what happens? We usually, and I'm going to draw this out so everyone can see it easily, we usually continue higher or in the direction that the zone's going after 25 minutes. So we entered here, 26.50, 5, 10, 15, 20, 25 minutes. Now at this point, at the 25-minute ticker, you have 3 choices, right? You can close the position. You can move the trade down to break even if that's a possibility, right? Or you can move your stop to the swing high, maybe a point above in worst case scenario, right? All of those are valid options. If you'll look on that 25th minute, we finally got the rotation down to garner our 2 points. Now, look at how that put us on the winning side of the trade versus a trader who chases, okay? And we all know traders who chase. We've all been traders that chase. Okay, so if you entered here, 1869.50, okay, and you wrote up, that's great. You're plus about 7 points there and you're happy. But guess what? Most people don't buy into these dips any more than they like to short into these run-ups. Okay, why? Because the number one thing everyone desires is to know what comes next. And what comes next usually requires confirmation of trend and requires confirmation that you're correct. So usually what happens is people build trust up here and they finally go, open drive higher. We're going higher. I'm going to buy here and I'm going to put a nice 2-point stop behind here and we're going to the high of the day. Well, guess what? You were right, but most retail traders use a 0.5 point to 2-point stops. I don't know why they use 0.5 points, but they do for some reason. 0.5 point to 2-point stops. They come back, they get tagged out, right? Even a 2.5 point stop got tagged out, only to watch in agony, right, as the market makes its move up. Now, additionally, right, when they see it break, they go, oh, I got to capture it, and they buy it right here. What happens to them again? It runs up. They don't take profit because they're waiting for the high of the day, and they have to go through this agony of pulling all the way back up. Think about it. If you bought this break here at 10, let's call it 10:15 in the morning, you weren't profitable, right, between holding this thing. It took you all the way over until 1:30 in the afternoon to get up like 3 points. That's crazy, right? And look at all the time and the risk you had, and you had to hold through New York lunch. Same thing with the guys who bought here. They got smoked to the downside. Look, this is very straightforward and very simple. If you use trade location, you took a trade here, right in the middle of the zone, and I called this out in the live market preview, 2 points. These points where there's just one single point of support or resistance on the chart, you got to treat that like it's the back of a zone. The stop is 2 points behind, right? Look at that trade location. Now, given it exceeded the 25 minutes, and you might have covered it flat if it took too long, but if you stayed with it, I mean, it was only 2-point stop. I mean, my gosh, it was a relatively small stop, right? You would have been able to garner, once again, another 2 points. 2 points here, 2 points here. It's 4 points. Do the math. If you do 4 points a day per contract, right? Now, I'm not saying that I never take losses, because certainly I do. Okay, but if you average 4 points a day, okay, heck, just average 3 points a day. Go ahead and assume that there's some losses in there, right? And you give that 5 days a week, you average 3 points a day, leaving some room for losses. That's 15 points a week. That's 60 points a month in Q. That is crazy for considering you took risk on 2 trades, that the market's always coming to you when you take your trade location. You're not having to chase, right? And all the odds switch to your end of the field because you've let them exhaust the move with rotations up and rotations down and let them come to you. Okay. And then once you build your trade size, you can leave a few trailers every once in a while and really boost the P&L, and you can fix that inverted win-to-loss ratio that I have at the zones. Life gets much, much easier. So as a trader, you have 2 choices. You can try to trade everything, right, and try to capture every move. That generally ends in disaster, okay? Or you can resolve that you're going to let the market come to you, that there's a natural rotation in the market, and if you take advantage of that rotation, the market will pay you over time, and usually on a day-by-day basis on a very high win rate, okay? That's what I'm a proponent of. I'm a proponent of letting the market come to you, making trading be easier on you, okay, and letting others take the extreme risk. You take the less extreme risk. You let them come to you, fill you on good rotations, and you take advantage when the others panic, when they've trapped themselves. So anyways, I hope that helped. There wasn't a lot to do today, and if you didn't make a ton of money, that was no big deal. But taking trade location, and I'll say this before, I'll say it again, I'll keep repeating it till I'm hoarse, okay? Trade location is an edge. You'll notice there's no moving indicators. There's no technical indicators on here. There's nothing that says, there's no indicator that would have told you this was good trade location to capture 2 points down here. There's no technical indicator that would have told you to take a trade here to capture 2 points down here. And there's no indicator that would have told you to buy the market right here, and you had no location, okay? In terms of there was no support resistance that I can see other than what occurred overnight. But if you'll take your time as a trader, You'll focus on the process. You'll commit yourself to the process, win or lose. If you followed the process, you had a good day, okay? The market will pay you. Sometimes it'll pay you a little bit, sometimes it'll pay you a lot, but it's so much better than getting constantly frustrated and being the trader who buys here and gets stopped here, who buys up here and gets stopped up here, right? So much better. And then on the days, right, where you're lucky, because most days we do not trend up. Okay, I want to repeat that. Most days we do not trend up. And guys that were buying up here blindly can very easily find themselves pushing all the way back down to the lows and the other end of the range. And you were lucky if you chased up, you held all day and it closed on the high. And what I would challenge you to do is this. Look on all the days where we had open drives higher, and if you simply held all those drives, and go back to the beginning of the year when we had all those great drives and they did pay, right? Go and look what happened in March. Go and look at what happened to you in April, how bad the damage was, okay? And hopefully that'll convince you that it is an unwinnable game to play momentum in ES. Okay, it is completely unwinnable. For every one day that you get like this, you get 4 or 5 days that are balance days. They go from one end of the range to the other, and guys who chase get smoked in that environment. Guys who wait for the market to come to them, right, we're playing right into the strong suit of ES. So I hope that helped. I'll be in here bright and early. I'm really getting a kick out of helping traders become profitable and stay consistently profitable. A little tired from the long day today, so I'm going to wrap it up. For tomorrow, right, we already know that 1878.50, 1877.50 area is incredibly important. As long as we hold above it, there's not much holding us back from new highs, okay? Not sure we'll get them. I'll let the overnight action, where we open tomorrow, Globex high and low, guide us, but I'm pretty excited about the possibilities. If you would like to join us, you can find the link on the blog to subscribe to a membership for the market previews, and hopefully I've got this recording issue resolved here. I'll find out here in a couple of minutes, and I will be able to post those recordings later in the day for those traders who choose not to join on a membership basis. My goal is still the same, which is to educate and help as many traders as possible move from being frustrated traders to consistently winning traders. I hope everyone has a great night. I will talk to y'all in the morning. I am signing out, and I'm going to go catch some Z's. Talk to y'all tomorrow.